Your 2022 might have been terrible, but here's how you can make your 2023 in the stock market a lot better. Now guys, none of what we say is financial advice, it's purely educational, and we do not own any shares mentioned on the slides. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. So the first lesson of 2022, and I think is the biggest lesson for me, is certainly the one that I've lost I would say the most money on.
For you and me too.
Yeah.
Me too.
It's a very nice, I wouldn't say a sports car, but yeah, let's just do that. So,
but then, okay, so I remember this vividly. I think it was in May 14th of May that this happened. And also we did an on the ground series.
Yes.
So what this taught me, it was actually, I was investing in something that I don't know.
Yeah.
It was completely very foreign to me, and I just invested because I thought, what could go wrong, right? like crypto is like back then it was still going up, on upward trajectory, and I was still. It was also something to do with greed, also. Yeah, and I thought that it can go up another 10x or 20x, so that's why. Yeah, I decided to just hold on to it until I lost all the money.
And to be fair, so part of the mistake was that, I mean, as the leader of the company, we allowed that sort of speculative behavior, right? Because one of the reasons why you probably bought into it is because people around you were doing it, right? And so all of this it will affect you, whether no matter how mentally strong you are.
But I still cannot blame you. Blame the team.
No, of course.
The reason why is also because I made money. Yeah. The difference is that the greed in me kind of made me stay on.
Correct.
Where I can actually
exit after that.
I can exit already. Yeah.
So for me, so the big irony about all of this is, okay, I knew things could go wrong with Terra. But the issue was that, okay, you need some background on Terra on this, right?
Yeah, there's a lot of things.
So because I was actually anticipating that Terra will fall, even in my head could fall 40-50%. But at the same time, the bull market could continue, right? So I still remember I liquidated half of those Terra assets and I put it into their stable coin, right? Which in my head, I thought it was cash. So one of my mistakes was to not diversify into what we call uncorrelated assets. So that was a big, when I look back, it's so silly that I didn't figure this out, but is to always diversify into uncorrelated assets. And what uncorrelated assets just means is that, look, if a particular asset is facing a downturn, the other guy will not only not move, but it will actually move in a different direction. And so I didn't do that. And, I got caught. And then the second thing is that history is not always reliable. So one of the reasons why I stuck by Terra was because, again, without going into the technicals, they experienced a 70-80% decline in prices in the year prior, which is May 2021.
Yep.
And they withstood that, right? Yeah. So in 2022, when it experienced the same thing, I'm like, oh, I've seen this before. Yeah.
You're correct. Yep.
And they withstood the test. Now, the big difference, of course, to my mind, is that the crash happened in a period where there were fewer diamond hands, meaning there were fewer people who believe in the project because it's good. So when essentially things go bad, there'll be a lot of dumping and there's this spiral, right? Whereas in the past, most of the people holding it were really believe in the project.
Yeah.
So the percentage of people that believe shrunk. So what is the learning lesson there? Well, recognize that things change, right? Recognize that as you increase the investor base, you will get different psychology involved, and reflexivity which is a George Soros term, is very, very real.
Right. Okay.
So that is crypto crash. Now the next one, this is more for you, right? So it's to take profit and cut loss.
Yeah. So
Maybach.
Maybach, I think in the previous video I got mentioned that I think it was in 2021 December I covered about Maybach.
You did a video.
I did a video on Maybach and I was quite bullish on it. And back then I was actually making I think like a 10 to 20% kind of gain, but I was pretty stubborn in the sense that I didn't really care much about the what is happening with on the qualitative side of the business, because they are actually selling core assets to finance their loan, to actually pay back their loan. And after that, they did manage to become a net cash company. But the thing that I didn't foresee was that they are in the dry bulk industry. They are selling dry bulk assets. So what are they going to do next? Yeah, there was like a big question mark over there. There's a very big uncertainty. I was only thinking that they did manage to turn around. So I thought that things were going to be better. But then back then there wasn't any plan discussed. Right now, of course, there is already. Maybach did disclose that they are, shifting their business into more of a departmental store, supermarket kind of thing. Yeah, which, we still don't know whether is it going to be profitable or not. But yeah, I should have actually taken profit when it actually went up quite a bit. But I decided to just hold my horses and just pray that it will go up another 30, 40, 50, or maybe even 2 times my money. So there was also a greed in it also. And cut loss is basically, again, I was hoping that it will recover. So yeah, I've been through the investor psychology. Like, when it thought that it can still go out, okay, then you hold. Then when it making loss, then you thought that you can still recover, like rebounds back. So I can break even and start to sell. But then after like thinking for quite a few days, actually I did have like 1 or 2 days of sleepless night.
Damn, really?
Yeah, because of this. Cause it was quite a big holdings also. Yeah, and I was thinking
concentration, right?
Yeah, concentration. Yeah, just now I think the previous video we mentioned that I'm only holding less than 5 stocks. So you can imagine.
And at that point in time, you also around there, right?
Yes, correct. So that's why being a very big holding and it's down, of course, you start to think that, maybe I really did something wrong. And then it got me like it took me a few days to finally realize that this is really not working out. And then I decided, and thankfully I did cut because it did went down even more after that.
Well, from when you decided to cut to today, do you know roughly
so when I was holding, I think it was around like 60 to 70 cents. Then it went up to like 88 cents.
Oh, then you must have felt like
I was like, okay, it's gonna pump this year. It's gonna pump more. So I decided to hold. Then from 88 cents, it went down back to 70 cents. Then it went to 60 cents. Then 60 cents to 50 cents each. Then that's where I cut.
Today is 36 cents.
Okay.
Oh, actually, it just fell down a lot. Wow. Oh, that's crazy.
Okay. So yeah, that is definitely a very painful lesson, but it is a good lesson also for me, so that I am it make me want to study about the business quality and actually take my research more seriously.
Yes.
And also take into all of these risks into consideration. And basically that made me learn more of a margin of safety kind of like the concept. So that is my story on Maybach.
Yeah, I think that's great. Cutting loss is one of the best skills you can ever do because the nature of so if you think about it, right, the best investors get 6 out of 10 stocks, right? Which means 4 times they have to cut loss. So if you're going to the stock market thinking you don't like to cut loss, don't like to accept losses, I'm just telling you, right? 40% of the time, if you're good, you will face that. And if you're going to be, if you're great. If you're a good investor, that's maybe 5 to 10 out of time. So half the time you're taking losses, you gotta like not take it personally, right? I think that was key. And that's probably why you had those sleepless nights and all that.
Yeah. And also because of positioning sizing also. Yeah, I just put a lot of hope on this one company.
Yeah. But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. if you're interested, you can apply it in the comment section or the description.
Okay, the third one, I think this is more of like a, I would say is it a lesson or is it more of like it became a common topic in the retail investor? Because back then, I believe in 2020, everybody's still busy talking about glove. 2021, somewhat also about glove. 2021 was tech. Very less about inflation, interest rate. Then 2022, at the start, that's where inflation and interest rates start to like kick in.
Yeah. So, you're right. And this is a positive lesson for me. So one of the big reasons why I managed to make 8% this year is because I decided to get out of the market late last year. Partly, big contributing factor was interest rates. And interest rates is something that we talk about a lot about, and liquidity a lot about in our big picture FIRL Pro reports. And it's something that you don't pay attention to until it pays attention to you. So it's important as an investor to always keep a mind, to always know in the US what they call the 10-year treasury, or in Malaysia what is the OPR and things like that. And the reason is because interest rates, as Warren Buffett said, acts like gravity on stocks. The higher it goes, it will push down. It will drag returns for stocks. And the reason is very straightforward, because then now you can get a lot of safety in bonds or the fixed deposit for a higher rate. So why take risks in the stock market? Or like, why take that amount of risk? If you used to have 50% of your money in the stock market, why not bring it down to 40%, 30%? That'll be what a lot of funds are thinking about. And that's when, you see markets will move.
I still remember that back then people always say cash is trash. Then when suddenly inflation, now it's like cash is king already.
No, I think that's why markets are by definition have cycles.
Yes.
And there are periods where one is good, the other is bad. And your job is to not get it right in the timing all the time, but is to get that basic flow. So you don't follow the wave 100% because you can't. But if you can follow 60, 70% of the time, you will definitely
outperform better than most of the people.
And another thing about interest rates that definitely reinforced, it didn't teach me, this year didn't teach me because I knew about it already, but it really, really reinforced, is that interest rates and all that, right, have a similar level of importance as fundamentals. What interest rates does is tell you, right, in general, how the market is going to move and liquidity and all that. What the fundamentals do is telling you which one will move faster and slower. That's it. And so once you combine these two together, I think you'll be a lot better investor. So you can allocate your portfolio better.
Yep, I agree. Okay, the next point we have here. Okay. This is an interesting one because I think this is the only year that we talk about Malaysia's currency versus others, say Singaporean and USD. I mean, I still remember that back then.
Videos are.
I remember people were like complaining, like, our government is useless. Why is the currency? Why is our currency like so bad? But then, thankfully, things actually take a turn around. When Anwar became our prime minister. And I mean, look where the currency is heading right now, man. It's like, ringgit is strengthening. So that is a pretty interesting ride for me. I mean, I think I did share this with you. I noticed when the ringgit was depreciating against USD, I saw a lot of people actually queue up at the currency place just to buy more USD. So
which if you think about it, is not very intelligent behavior, to be completely honest. I mean, it really moved really. Actually, that is a sign already that you know that maybe it has peaked already when more and more people start to buy in USD. That's very true. But I think that's, just to add to this, I remember last year there was a big, everyone, even some of our fellow creators were making videos on why the ringgit is bad and all that. And so they got out and then they started investing in US stocks, right? So what was the joke, why let a 9 currency depreciation affect your portfolio? Why not 90% decline?
Yeah, 100%.
So
100%.
I think that's a good. I think it was Ray Dalio who said cash is trash, right? I think thankfully he changed his mind.
Yes. Okay, finally we have here also another interesting year because we face a lot of crises in 1 year. So there's a war, and then also there's a property crisis in China. Then also there's like the inflation rate, the commodities are all like rising like mad. And then there's also deglobalization also.
Oh yeah, that's big,
everybody is like protecting their stuff. I remember like India is not exporting rice or something. Then Malaysia, we are not exporting out our chicken. Yeah. So this is definitely an interesting year. I believe all of these crises don't really happen concurrently I don't know, correct me if I'm wrong, in the last like decade or something. I think this is the one of the only year that I also, because I didn't really face any crisis before other than COVID-19. That is where I remember lah. When I was young, that one I don't know lah. Yeah, but with the war and the property crisis, this is like the first time that I'm seeing all this happening in my eyes.
And one of the big implications that has come out with, like you said, deglobalization is that I think inflation is here to stay. It may not be as high as 7, 8, 9%, but it is definitely here to stay. The reason is because I think there is a lot more distrust between countries nowadays. And so what happens is that people will want to try and secure their own supply chains. And so what ends up happening is that, there'll be more disruptions over time. It will not be like what happened in COVID, like a big one. But there's going to be a more elevated average compared to before COVID.
I mean, like people always adapt to all of these changes. So for sure, you'll see that things will be hopefully it will be much better in the next few years.
Of course. But regardless, invest safely, guys.
Yes. And before we go, actually, we still got one last thing to show you,
right?
Which is the 2023 outlook. So just going to keep it very brief here. I think you and I are still positive in the market. That's why we are still staying invested. But we are going to stay invested in things that we know best. Yeah. And so that...
it's... I know it might be boring advice, but that's how it is.
Yep. And again, FIRL Pro, this is our November 2022 performance. We're going to be updating the December performance. I believe it's much better. Insider info right here because I'm the one keying in. So so you'll be seeing the December performance next week. In the next week video. And if you want to know the free sample of our stock report that we write in FIRL Pro, a big picture report, all those are all in this free sample. So you can check out, the links are all in the description and comments.
The reports are all very easy to read. You can finish it within a cup of coffee, like I always like to say. And to really shortcut your research journey to finding hopefully great investment ideas for yourself.
Yes.
And guys, thank you so much, for staying all the way. Always appreciate your support. Come support us further by following us on our social media channels, Telegram, Instagram, the likes. And guys, Happy
New Year.
Yes. Happy 2023. Hopefully remember to post this video
on
2022. Okay. But anyway, guys, see you next year.